everyone. Welcome to the latest Take 5 with Ryan and Sonu. Sonu, we are coming to you from your home city.
Chicago. There we are. You can see the Sears Tower in the background, right over my head, hopefully.
Yeah, there it is. So,
welcome, Ryan.
Thank you. Yeah, we're about to go get some food here. So, Sonu, all the talk has been about October being weak. Some of the best is the wrong way to put it. Some of the largest crashes ever. 87, 2008, 2011 was pretty volatile. Will there be an October crash? We don't think so. Let's get that out there now because you're going to hear a lot about that. Why don't you think we'll have an October crash, Sonu?
Well, the other thing about October crashes is they crash and sort of end in October, don't they?
Yeah.
So you get October bottoms as well. You get a lot of bottoms in October, stock market bottoms, I should say. Look, the economy is doing well. We just saw yields hit the highest levels in more than, a decade and a half. 10-year Treasury interest rates are close to 5%. Why are they going up? Simply because the economy is doing well. And that's, the economy is doing better than anyone expected. When we are recording it this morning, we saw the job openings. The Fed's been tracking that. That rose to above 9 million, right? That was unexpected. It just shows that demand for labor is more than people expected. That means the economy is doing better than people expected.
Yeah, so again, you think about it, we're selling off because things are doing better. Now, believe me, from a portfolio's point of view, bonds are obviously having a really rough go of it. Stocks have pulled back. But again, we pulled back approximately 10% on the S&P 500. So your average year sees more than one 10% correction per year. So after one of the best starts to year ever, after 7 months for the S&P 500, at least the best since 1997, best 6 months start of year ever for the NASDAQ. Some seasonal weakness. We talked about this before, and some bears are out there causing trouble. Apparently, I don't know if you hear the sirens. I mean, we expected some third quarter seasonal weakness, but last year at this time, just think about last year. We come into October, vicious bear market into the middle of October, down 25.5% on the S&P 500. It felt really, really bad. And that spawned, obviously, a really, really nice rally. Mark Twain said, history didn't repeat itself, but often rhymes. 6 of the last 17 bear markets ended in October. I think after last year, we can say 7 out of 18 of the last bear markets ended in October. And then we got some sirens coming. If you hear those sirens or not.
Welcome to Chicago.
Welcome to Chicago. But again, the reality is this is how these things sometimes play out. Seasonality is going to become a positive real soon. A lot of negativity. We just need a spark. So what could be the spark kind of to get things turning in the right direction?
I think I would say the spark is inflation going down, right? If inflation goes down, and we think that is the case, if inflation goes down more than what everyone expects, including the Fed, I think there's a catalyst for, maybe rates won't be as high as everyone expects them to be at this point. And I think that could be the spark that sets off, a fourth quarter rally.
Yeah, no, I can't disagree. We talked a lot about that. There are pockets of inflation. I mean, energy. Fill up your car. We're in Chicago. It costs more to fill up your car. But there are other pockets of inflation that have really been coming back, right? Food prices have been coming back. Rents and shelter prices have been coming back. What are some other parts of inflation you think that are coming back that no one's talking about?
I think durable goods, right? Durable goods is a big piece of it. I mean, gas prices at the end of the day, and we think looking at gas price futures, I won't get into what futures are exactly, but looking at gas price futures, those have been coming down, and that means people have a little more discretionary income to spend on everything else. And at the same time, the cost of, whether it's appliances, furniture, all of that is going down, right? Ryan, you just mentioned rents as well. All that is going to be a tailwind for the consumer. That means real incomes are going up. And irrespective of all the bad news that people are talking about, strikes, shutdowns, student loan payment restarts, yields going up, right? Treasury interest rates screaming up.
Speaker of the House today we're recording this.
Right, the Speaker of the House. Well, we don't have a Speaker of the House as we're recording it. We have a temporary one, right? So shutdowns, maybe that is a larger possibility next month, 40 days from now. But, we think the economy can get over all this because why? Real incomes are growing, right? Incomes adjusting for inflation. That's growing. That's good for the economy.
Yeah, exactly. I think we've got a little bit more time. I just realized, we're literally standing in front of places that says cakes, cookies, pies, cupcakes, pastries. It's incredible. It's incredible we've been able to keep focus with that in front of us. But again, I think that to put a bow on all of this, right? The economy is still strong. We still think this is more of a normal pullback after a really strong year for stocks. It's very uncomfortable, we'll admit, for investors, but again, this is part of the process. And you have to remember, this is how things happen. Our brains are wonderful things. When we want to sell, we want to get out when everything seems terrible, or we love it, right? At the end of July, when everything's going higher, everybody loved the stock market. Then all these bears were coming out saying, oh, it now is like 2019. I remember one of the bears came out and said that. I was like, oh my goodness, here we go, when they're saying things like that. So you put it all together. Again, it's part of the process. We're still optimistic we're going to have a fourth quarter rally, and we do not see a crash this October, a la 1987's crash with that this year. With all of that, this is the latest Take 5 coming from Chicago. Ryan and
Sonu.
We're
going to get some dinner.
We're going to get some dinner from the streets of Chicago. Take care, everybody. Bye-bye.